Hi, my name is Holly Penal. I'm the owner of Camp and Craft, a marketing, training, and event consulting business. I am here today with Ventures, which is a nonprofit located in Seattle, Washington, to share with you more about profit and loss and cost of goods sold. By the end of this video, you should understand what the profit and loss or P&L equation is and how it varies for different types of businesses, and you should be able to define cost of goods sold or COGS and understand the role of COGS in the P&L equation. Now, whether you've recently started a business or you're thinking about starting your own business, you probably have a lot of reasons for doing so. Maybe you want to pursue a passion of yours or you want to be your own boss. Either way, I'm going to guess that you also want to make money. You want to make sure that the money you bring in is more than the money that you spend. One way that we can analyze profitability of a business is by looking at the profit and loss equation. The profit and loss equation helps us to analyze the relationship between revenue or money earned and expenses or money spent. Simply put, the equation is revenue minus expenses equals net profit. If our expenses were greater than our revenue, we spent more money than we made, then we would have a net loss. Let's look at a P&L equation for a basic service business. So this business is a social media management company. They manage the social media accounts for other businesses, and we can see that they earned $5,000 last month for their services. Now we go below to their operating expenses. These are things like rent, insurance, marketing, etc., things that they spent on their business throughout the month. We can see that we have a total expenses of $1,025. When we take our total revenue, $5,000, and subtract our total expenses, $1,025, we get a net income or a net profit of $3,975. Let's look at a P&L equation for a retail business. In the revenue section, you might notice something a little bit different. Here we have cost of goods sold. Let's take a moment to define cost of goods sold. Cost of goods sold are the costs directly associated with producing or acquiring products that are sold by your business. These are different than operating costs. Some examples of COGS include products purchased from a wholesale business that you sell at your retail business, or ingredients used to make baked goods at your bakery. Cost of goods sold does not include rent, utilities, or other operating expenses. Let's go back to the P&L equation for a retail business. Let's say that this is a shoe business, and last month we sold $8,000 worth of shoes. Well, in order to sell those shoes, we had to actually acquire them, and there is a cost to that. The cost of goods sold reflects the $3,000 that we paid to get the shoes that we then sold for $8,000. When we take our sales of $8,000, subtract out the cost of goods sold for $3,000, we get a gross profit of $5,000. Next, we have our operating expenses. These are things we spent money on but weren't directly associated with requiring those shoes that we sold. We get our total expenses, which is $2,395. We take our gross profit of $5,000, subtract our total expenses, and we get a net income or net profit of $2,605. An important point to make is the cost of goods sold is literally for the goods that were sold within this financial period. So we sold $8,000 worth of shoes and we spent $3,000 to get those shoes that we sold. This doesn't include other inventory that we purchased that we did not sell in this time period. Cost of goods sold only applies to the shoes that we actually sold. Let's look at the P&L equation for a bakery. Just like in our last example, we have a cost of goods sold, but this time we've broken it out into two categories, ingredients and product packaging. We're basically saying that we have a couple of different things that go into making our goods to be sold. In this case, ingredients, which are things like flour, butter, sugar, etc., and product packaging, let's say the boxes that cakes and cupcakes go into. The equation is the same. Our sales minus cost of goods sold gives us our gross profit. We also have our operating expenses just like before, and the overall equation, which is gross profit minus total expenses, gives us net income or net profit of $2,605. Let's circle back to a P&L equation for a service business, in this case with a cost of services sold. Here we have a plumbing business that does things like fix garbage disposals and toilets in folks' homes. In order to perform those services, they need to buy things like parts. That gives us the cost of services sold, stuff that we had to buy in order to perform the service. The equation, once again, is the same. To get gross profit, we take our sales and subtract out cost of services sold. Then we take our gross profit, subtract out total expenses to give us our net income or net profit of $2,605. And that's it. Now you know about the profit and loss equation and cost of goods sold. To review, the profit and loss equation, or P&L, shows the relationship between sales and expenses in a business. It calculates the net profit or loss during a specific period of time. Cost of goods sold, or COGS, are the costs directly associated with producing or acquiring products that are sold. This includes purchasing items for resale, ingredients, and raw materials. COGS are subtracted from sales in order to determine gross profit. Thank you so much for watching. To learn more about ventures, visit online at venturesnonprofit.org.